Hi, today we will look at Bitcoin's macro cycle. We will check how far have we gone during this bull run, how far could we potentially fall, have we already bottomed, and what's in general the current risk versus reward. Now, one thing I like to look at is the 4-year moving average, because historically this has been the absolute floor for Bitcoin. Whenever the price reached the 4-year average, it has been historically a really good time to buy. So if you're looking for the absolute maximum, where do I think could Bitcoin potentially fall, it's that line. And currently the 4-year moving average is at around 12,400. Now that's a current drop from here of potentially 67%. But the moving average is not static, it increases over time. In fact, since the price has never been below the moving average for any extended period of time, this moving average is steadily increasing. And so if we just draw an imaginary line, how could this moving average extend in the future? We can maybe draw something like this. And so now it depends how quickly could Bitcoin potentially fall. The faster it falls, the lower it could potentially go. So imagine we were in a downtrend until the end of the year. Not enough buyers would be in the market. We would look at a Bitcoin price of approximately 20,000 or a drop of 47%. Now, is this going to happen? I don't know. Nobody knows. But the reason why I think this line is helpful is because it gives a good indication of when to be really heavily invested into crypto. So you definitely want to keep some cash on the side and allocate more and more into Bitcoin or into crypto in general as the prices fall. And I think it makes sense to target your maximum tolerable risk exposure to crypto at those levels. So you buy more, you buy more, you buy more. And when your maximum allocation you ever want to have to crypto is, say, 40% or 30%, that's the kinds of price levels where you want to be at such an allocation. Or in other words, you don't want to be heavily in crypto when we have already extended quite far from this absolute bottom because you have more room to fall. So the risk versus reward is not that good, comparatively speaking. But if we are in these very low levels, the expected return on your crypto investment is probably quite high. And so that's where you want to load up on crypto and then gradually sell as we extend away from this absolute bottom and then buy back in again as we fall closer to this bottom. So this is the 4-year moving average line. What's also helpful is to look at the 3-year moving average. That's this one over here. And this gives you a corridor of where you have an absolute, historically speaking, great accumulation zone. So whenever you buy, when the price is in between those two averages, you are likely to be on the right side of history. It's after the March crash last year. It's after the big capitulation when we lost this historical 6K support line. And it's after the Mt. Gox crash has bottomed out. So these times don't happen very often, but when they do, historically speaking, they have been really good times to buy. Now, when you look at this historical chart, it starts all the way in 2010, goes to today, and it's plotted on a logarithmic scale. So at the bottom here, you see differences in cents. At the top, you see differences in the thousands of dollars. Now, if you wouldn't use a logarithmic scale, this is how this historical chart would look like. You can't do a lot of analysis on this, but it gives you a perspective of how far we have come. Now, there's two things about this chart. Over the long run, Bitcoin's price is increasing. It goes through booms and busts. And with time, the return seems to be decreasing in relative terms. So in the early days, in less than a year, Bitcoin made approximately a 400x. And nowadays, the gains are a bit more modest. We are only looking at a 10x. So there's this curvature in this chart. So let's try to connect those tops, like this top over here, this one, and this one, with a curved line. And let's try to do the same for the bottom of the price data to find a channel where the price is moving. So these are the imaginary lines we could draw, but note this is not exact science. For the top, we could also draw this. So it's not really clear if with the recent top we have actually hit this top resistance line of this channel. But I think it gives a rough idea of where the price potential is and where we might also potentially fall to. Now let's zoom in here. If we use the bottom of those two trend lines, we are looking at a 70K Bitcoin by end of the year, or an 80% gain from here. If we look at the top, we are at a $100,000 Bitcoin and a gain of 165%. Now, if it all goes downhill, 12,500 would be the bottom of this supporting line, or a 67% loss. I personally, though, don't think that this will happen because the 4-year support line is already above this trend support line. And so if we do fall, I would already load up heavily on crypto once we near this moving average. And if we would really fall further, I would just hold through this potential loss, which I mean is another 30%. But at that point, you would look at a potential 30% loss versus a more than 500% gain. And that's not even taking into consideration that the trend in general is moving upwards. So at this point, risk versus reward would be really, really good. So some people have the idea that the Bitcoin market cycles, due to the increasing market cap, have the tendency to lengthen over time. So basically this bull run was really quick. It happened in less than a year. Then this bull run took a bit longer. It took around 2 years. Here we are looking at around 3 years. And so people think this bull run might take at least 3 years, if not even 4. So if it would take 4 years, we are looking at an end of this bull market by autumn of next year. And according to those imaginary lines here, we are looking at a maximum peak of around 130K for the Bitcoin price. Now, because people think this bull run might take longer and this might not be the final top, people compare this move here to this move over here. So we had a big run up, but a substantial crash, and then we hit the final top. And this crash here in the middle was around 60%. Now, I personally don't really subscribe to this idea. Let's just overlay the chart patterns and see what we would get. So what you see in orange over here is this exact chart pattern that happened in 2014, just adjusted in scale to the current movement. Now, if we assume that the recent 60K top corresponds to this $130, $150 top in 2013, and we overlay the chart patterns, and we assume a second bull run will come after this correction, we are looking at a potential price of almost $500,000 per Bitcoin. And I personally think this is probably too optimistic. At this price level, the market cap of Bitcoin would be very close to the market cap of gold. And just by looking at historically in what kind of ranges did Bitcoin peak in the past, I don't see such a development is really going to happen. I think this top over here is much more similar to this top over here. And that's because those market cycle tops here, they have been very quick movements. Price went up, price went down. Price went up, price went down. But here we recently stayed at this high level for an extended period of time. We didn't just shoot up and come down again. And we can also see this in the trading volumes. When the price was shooting up, trading volumes went up in each of those cycles. Excitement was at a high, so was price and trading volume. But here recently at this high price point, we didn't have high trading volumes. This day over here with the higher trading volume was after a crash. But at these high price levels, the market was comparatively calm. And that's similar to September 2019. We went up in price, we stayed at a high level for an extended period of time, we lost momentum, we also lost trading volume, and then the price went down. So let's overlay those patterns. So now we're looking at this area and we overlay this top over here with the recent top. So we are looking at a potential crash to the $19,000, $20,000 range. This is also the area where potentially the 4-year moving average could hover at that point. And then if history repeats itself, by September of next year, we could be somewhere between 126K to maybe even 190K. Those are the kind of ranges I think are realistic. Will it play out like this? It's unlikely to happen one-on-one exactly like this, but this is my best guesstimate. We have been overextended. At the current price, we're looking at something between a potential gain of 70% to 140% versus a loss of around 50%. And so given we have lost quite a bit of momentum, I am personally prepared for another dip. I wouldn't be angry at all if it plays out like that. I don't think, though, that most people expect this. I'm just saying, be prepared for whatever happens. Have some Bitcoin in case all those imaginary lines don't hold any value, and in case we really shoot up from here. but also have some cash on the side or be prepared to sell some other assets to move into crypto in case we really drop down to those 20K. Because I personally think this would be, again, a historically great buying opportunity. If you enjoyed the video, please give this a like so the channel can grow and YouTube shows this video to a new audience. And feel free to subscribe if you haven't yet. See you next time. Bye bye.